Welcome to a journey of financial enlightenment with Robert Kiyosaki's Rich Dad's Guide to Investing. This insightful guide is the brainchild of Kiyosaki, a luminary in financial literacy and a successful investor in his own right. Through this book, he equips us with the know-how to navigate the investing landscape with confidence and acumen. It's a comprehensive roadmap to becoming a successful investor, revealing the secrets of the wealthy and the financial strategies they employ. So without further ado, let's dive into the key points that Kiyosaki shares in his book. Kiyosaki starts by stressing the importance of financial education. Now, you might be wondering, what does he mean by that? Well, it's simple yet profound. Kiyosaki believes that the cornerstone of successful investing lies in a solid financial education. Not just knowing how to make money, but understanding how to manage it, grow it, and most importantly, keep it. Imagine for a moment that you're building a house. You wouldn't start with the roof, would you? Of course not. You'd start with the foundation. And that's precisely what financial education is to investing. It's the foundation. But what does this financial education entail? Kiyosaki suggests that it starts with learning about financial statements. These are the reports that show you where a company's money came from, where it went, and where it is now. It's like the report card for a business. By understanding financial statements, you'll be able to see the financial health of a company at a glance. You'll know if the company is thriving or barely surviving, and it doesn't stop there. Kiyosaki also emphasizes the need to understand the differences between assets and liabilities. You see, an asset is something that puts money in your pocket, while a liability is something that takes money out of your pocket. Seems simple enough, right? But you'd be surprised how many people get this wrong. Some people think their house is an asset when in reality, it's a liability, draining money each month for mortgage, maintenance, and taxes. It's these fundamental concepts, understanding financial statements, and distinguishing between assets and liabilities that form the backbone of a sound financial education. These are the tools that will help you navigate the complex world of investing. And why is this so important? Because knowledge is power. The more you know, the better decisions you can make. The better decisions you make, the more successful you will be as an investor. Remember, a sound financial education is the first step towards becoming a savvy investor. Kiyosaki challenges the traditional concept of being rich. Now, what does that mean? Well, in the world according to Kiyosaki, being rich is not about the size of your paycheck. It's not about the car you drive or the house you live in. It's not about how much money you make, but rather about how much money you keep. Let's take a moment to let that sink in. It's not about the money that flows into your bank account each month, but the money that stays there, grows there, and most importantly, works for you there. This is a stark departure from the common perception that associates richness with high income. Kiyosaki believes that being rich is about wealth accumulation. It's about building and maintaining wealth over time. It's about creating multiple streams of income that work independently of your efforts. It's about having your money work for you instead of you working for your money. It's about making smart financial decisions that increase your wealth, not just your income. It's about investing in assets that generate passive income, assets that appreciate in value over time. It's about understanding the difference between an asset and a liability, and making sure that your assets always outweigh your liabilities. It's about financial discipline, about not giving in to the temptation of instant gratification. It's about understanding that every dollar you spend today is a dollar less that you'll have for your future. Kiyosaki emphasizes the importance of this concept throughout his work. He encourages us to rethink our relationship with money, to shift our focus from earning to preserving and growing. He urges us to become financially literate, to understand the principles of money management, and to apply them in our lives. So, in essence, being rich, according to Kiyosaki, is not about living a life of luxury, but about living a life of financial freedom. It's not about how much money you make, but about how much money you keep, how hard it works for you, and how many generations you keep it for. So being rich is about wealth accumulation, not just income. Investing, according to Kiyosaki, is the key to financial freedom. These words may seem simple, but they carry a profound message. Kiyosaki believes that investing isn't just about putting your money somewhere and hoping for the best. It's about understanding the power of your money and using it to create more. In the world of Kiyosaki, investing is synonymous with acquiring assets. But what is an asset? An asset, in Kiyosaki's terms, is something that puts money in your pocket. It's not necessarily a pile of cash or a savings account. It could be a piece of real estate, a stake in a business, or even intellectual property. The key is that it generates income for you even when you're not actively working. This concept is a departure from the traditional view of investing, which often focuses on stocks, bonds, and mutual funds. While these can certainly be part of an investment strategy, Kiyosaki emphasizes the importance of investing in income-generating assets. These types of investments, he argues, provide a more reliable and sustainable source of income. Imagine owning a piece of a profitable business or a rental property. These assets work for you, earning money even when you're sleeping. That's the power of investing, as Kiyosaki sees it. It's about making your money work for you, freeing you from the need to trade your time for money. Kiyosaki's perspective on investing is undoubtedly empowering. It challenges us to think differently about our money, to see it not just as something to spend, but as a tool to create wealth and financial freedom. It's not about getting rich quick, but about building a solid financial foundation that can withstand the ups and downs of the economy. And the beauty of this approach is that it's accessible to everyone. You don't need a fortune to start investing. You just need the willingness to learn, the patience to build, and the courage to take calculated risks. So remember, invest wisely, and your money will work for you. Kiyosaki's words are more than just a tagline. They're a call to action, a challenge to take control of your financial future and make your money work for you. Risk is another crucial element in Kiyosaki's financial philosophy. In the world of investing, risk is often perceived as a villain, a menacing force to be avoided at all costs. However, Kiyosaki flips this perspective on its head. He believes that risk is not a monster to be dodged, but a tool to be harnessed. In Kiyosaki's view, risk is not inherently good or bad. It's a bit like fire. In the wrong hands, fire can cause devastation, but if used correctly, it provides warmth and cooks our food. Similarly, risk, when understood and managed well, can fuel our financial growth. One of the most intriguing aspects of Kiyosaki's philosophy is the notion that avoiding risk altogether can be the riskiest move of all. He argues that playing it safe can leave us vulnerable to the whims of the economy, inflation, and job market fluctuations. By contrast, embracing calculated risks can offer us more control over our financial destiny. Kiyosaki's unique perspective on risk is rooted in the belief that financial education is the key to risk management. He asserts that the more we understand about investing, the better we can gauge and control risk. This is why he places such a strong emphasis on continuous learning and self-education. Kiyosaki also points out that successful investors don't just take risks. They take informed risks. They gather as much information as possible, analyze potential outcomes, and then make calculated decisions. They don't gamble, they strategize. In essence, Kiyosaki encourages us to shift our thinking about risk. Instead of seeing it as a deterrent, we should view it as an opportunity. We should learn to navigate the seas of risk, not just avoid them. Because in the end, those who understand and master risk are the ones who reap the rewards. So let's not fear risk. Let's understand it. Let's use it. Because as Kiyosaki so aptly puts it, risk can be your best friend if you allow it to educate you. Understanding risk, therefore, is key to successful investing. Finally, Kiyosaki discusses the power of corporations. The corporate world, according to him, is an arena of great potential, a battlefield where economic wars are fought and fortunes are made. But what sets corporations apart? What makes them such powerful entities? Kiyosaki emphasizes the benefits of owning a corporation. When you own a corporation, you're not merely a part of the wheel, but the entity steering the wheel. You're the one making the decisions, the one in control. That's power. But the advantages don't stop there. Corporations offer unique financial benefits as well. One of these is tax advantages. In many jurisdictions, corporations have the ability to write off expenses before they pay taxes. This is a financial strategy that can maximize profits and, consequently, returns for shareholders. Then there's the shield of limited liability. In a corporation, it's the corporation that holds the liability, not the individuals. This protection against personal liability means that if the corporation faces financial trouble, your personal assets are shielded from creditors. In this dynamic world of economic activity, Kiyosaki sees corporations as vessels of opportunity, as entities that offer the chance to amass and protect wealth. They are not just structures of brick and mortar, but vehicles of financial growth and security. In essence, owning a corporation can be a powerful tool for wealth creation. Let's summarize what we've learned from Kiyosaki's Rich Dad's Guide to Investing. We've underlined the pivotal role of financial education in wealth creation. We've explored the essence of true richness, which extends beyond mere possession of material wealth. We've delved into the far-reaching influence of investing and how it can be a game changer. We've considered the role of risk, an inevitable part of the financial journey. Finally, we've touched upon the immense power of corporations. Remember, investing is a journey. Equip yourself with the right knowledge, and the road to financial freedom is yours to take.